Greetings, fellow traders. I'm Dylan, a research strategist at Pepperstone, presenting the latest weekly update on As Good as Gold. Over the past week, the gold market has been actually pretty quiet, continuing its sideways movement. Weak U.S. inflation and growth data, along with uncertainties from the Mexican and Indian elections, have boosted safe haven demand, giving gold prices some support. However, the overall strength of the U.S. economy and the Fed's reluctance to cut rates have kept gold in check. Traders are now eagerly awaiting tomorrow's European Central Bank meeting and Friday's U.S. non-farm payrolls report, as any surprises could finally break this consolidation pattern. So if we take a quick review at the recent daily chart of gold against US dollar, we see that for the past 2 weeks, the price has been stuck between 23.30 and 23.60 US dollar, with bulls and bears taking turns. The 23.6% Fibonacci retracement level from the mid-February to mid-May uptrend, which aligns with the lower bound of the trading range at $23.30, has proven to be a solid support. In the short term, $23.60 and $23.30 remain the key levels to watch, and if new catalysts come into play, $2400 above and $2300 below will be crucial in confirming a breakout or breakdown. Undoubtedly, the current impasse in gold prices reflects a balance of power between buyers and sellers. On the bullish side, the month-on-month increase in April's US PCE inflation fell from 0.3% to 0.2%, the lowest monthly increase this year. Also, in the latest US ISM manufacturing PMI came in below consensus at 48.7, with the new orders sub-index hitting its lowest level since May 2023. With both April CPI and PCE inflation cooling and manufacturing activity contracting, there are concerns about the U.S. economic growth outlook. So the U.S. dollar index just dipped below 104 intraday on Tuesday, and the 10-year U.S. Treasury yield fell to around 4.3%, reducing the opportunity cost of holding gold and supporting its price. Well, on top of that, aside from the ongoing Middle East tensions, the unexpected developments in both the Mexican and Indian elections have increased safe haven demand, boosting gold. This trend is likely to continue with the upcoming UK election in July and the US election in November. On the flip side, despite some, cooling in economic data, U.S. inflation is still above that 2% target, and the labor market remains strong. With the FOMC meeting's blackout period beginning, we can't really glean much from the official's comment, and the Fed's previous stance against quick rate cuts weighs on gold. So to sum it up, gold is stuck in a range right now. Weak U.S. economic data and election uncertainties are attracting buyers, but the Fed's cautious stance on rate cut is limiting the upside. This week's ECB meeting and U.S. non-farm payrolls report are the major events to watch. Well, for the ECB meeting, I believe a 25 basis point rate cut seems almost certain. However, starting a rate cutting cycle could have mixed implications for gold. On one hand, a rate cut could strengthen the US dollar, which is bearish for gold, while on the other hand, more liquidity can be released from the rate cuts, which could give gold a boost. So in this case, we'll need to pay close attention to guidance on the future rate cuts and economic forecast to gauge gold's next move. Well, on the day after the U.S. non-farm payrolls report will be in the spotlight, the market expects an addition of 180,000 jobs, up by 50,000 from last month, and the unemployment rate is expected to remain at 3.9%. I assume this unemployment rate could be the most market-moving part, and if it rises to, say, 4%, traders might anticipate an earlier Fed rate cut, hurting the dollar and boosting gold. Conversely, if it falls to 3.8%, gold could dip below that $2,300 US dollar mark. So that's pretty much for this week. If you have any thoughts on ECB meeting, US non-farm payroll data, or recent gold trading in general, feel free to leave a comment below and let's have a discuss. Stay tuned with Pepperstone for more insights and updates. And until then, happy trading!